Ladies and gentlemen, Greg Mikulowski with the Kickstart video for May 10, 2024. In the Kickstart video, take a look at three of the major FX currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. I might add a little extra by taking a look at the dollar versus Canada after their stronger than expected jobs report. So let's get started. I'll start by taking a look at the hourly chart of the euro versus US dollar. And coming into the last hour of trading, the price's action has been very narrow, with only about a 15 pip trading range for the entire day coming into the U.S. session. The last few minutes have seen a move to the downside, and that move to the downside has a pair moving back toward its 100-hour moving average. Recall from yesterday, the price moved back above that level, also above this swing area at the same time. The swing area is defined by different swing highs and lows, as you can see. Then we move back to using the level as resistance here before breaking to the upside and trading yesterday and pushing higher. The high price that we saw yesterday was, or actually today was, in the Asian session, was near the high price that we just saw in the Asian or in the European session. And if I extend this line a little bit further, it's kind of near this price high from, let's see, that was Tuesday's trade. On Monday, the high price for the week came in and topped out at the 50% retracement. That's of the move going back to March, the March high to the April low here. The 50% retracement comes in at 1.07906, and that's exactly where the high price came in on Monday's trade before we started this rotation to the downside, bottoming on Thursday's trade. As a matter of fact, against this swing area right here, we did move below the 200-bar moving average on the hourly 200-hour moving average, I should say, but could not sustain that momentum, finding support against this lows right through here, and also this swing area, the entire swing area here between the 1.0722 and 1.07346. So that was a good hold right there, and the high prices also held against basically the Tuesday high and below the 50% retracement, and also below the 200-day moving average. So there's a lot going on, but basically what the key technical levels in play here today are the 100-hour moving average on the downside at 1.07608, move below that level, and we should see further selling pressure with other levels in play here, including the rising 200-hour moving average. Ultimately, it would need to get below that level to increase the bearish bias for this pair. On the top side, we obviously have the high prices from not only today, but also from on Tuesday's trade, followed by the 200-day moving average and the 50% retracement, which is going to be a yummy level for technicians to either lean against, because risk can be defined and limited, or to use as a springboard for higher a momentum move to the upside. Recall from last week's employment day. Now this is off the employment numbers. The price did move above those two key levels, but could not sustain the momentum, and then started to use that 200-day moving average as resistance. So there is some history in that moving average, of course, and it would take a move above that level to increase the bullish bias going forward, in addition to the 50% retracement level. All right, that's enough on that currency pair. Let's take a look at the dollar versus yen next. And again, we're going to look at the hourly chart, and what we saw in trading yesterday and into today was that trundle down toward the 200-hour moving average, I should say. In the Asian session, we got within a spitting shot of the 200-hour moving average before we found support and started its rotation back to the upside. That move to the upside still has the high price from yesterday's trade as the next key target. That level comes in around the 155.95 level, and just above that is a 50% retracement of the move down from this high to this low right here. That 50% retracement comes in at 156.029. So 155.94 up to 156.029 is the next key target. On the top side, we're currently trading at 155.82. So be aware of that area up through here as a key resistance for the dollar versus yen. Similar to yesterday, the 200 and 100-hour moving averages are levels that we need to get to and through on the downside to increase the bearish bias. I know it's a long ways away, but we are seeing higher ranges in the dollar versus yen recently. So it's a little intervention talk or something like that, but we're that type of stuff came up here around the 156 or 160 level up there, and also right here. But so we're a bit of ways away from that. But nevertheless, this would be the areas that the price would need to get to and through to increase the bearish bias going forward in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And again, on the hourly chart here, what we've seen in trading today is, again, up and down price action in a fairly narrow trading range. We did have this cluster of moving averages, which we've been confined mostly in trading here today. On the top side, we did have the key 200-day moving average. It's always a key moving average, which we came up to, and again got close to, but couldn't get above. And then we started to rotate back to the downside, staying below mostly the 200-bar moving average on the 4-hour chart at 125.32. The 200-day moving average, by the way, is at 125.42. We have moved down to test a couple other moving averages down here, so a total of 4 moving averages within a fairly narrow trading range, including the 100-hour moving average. That's a blue line in the chart, and the 200-hour moving average. That's a green line in this chart. Those levels come in around the 125, 18-ish type level, maybe 17 up to 18. So getting below that levels and staying below those levels is needed to increase the bearish bias to the downside for the sterling versus US dollar going into the closing hours of the new trading week. For the trading week, the high price was reached on Monday, and we came up to the 50% midpoint of the move down from, again, the probably the March high way back here. You can't see it, to the low that we saw in April. So holding that 50% retracement gave the sellers a go ahead to push to the downside, where we have this key support level, and we did break below that key support level in trading yesterday, only to fail quickly. Oftentimes you got to look for those quick failures, like we saw in the euro versus US dollar when it moved off the employment data. So we got to watch that those failed moves, and it pushed the price back to the upside into the cluster of resistance seen above here. Finally, I promised I would take a look at the dollar versus Canada after their stronger than expected jobs report, and that sent the dollar Canada lower, Canadian dollar higher. But what stalled the fall was these two lows on April 26th and April 29th, respectively. It was a double bottom right through here, which again was broken in the employment report last Friday, but could not sustain that break. So we have 1, 2, 3 lows down here at the 136.31, 32-ish type area. We bounce back. We are staying below the 200-bar moving average on the 4-hour chart. As long as the price can stay below that level in this swing area right through here, the bias is tilting more to the downside for the dollar versus Canada. So be aware of that. Again, we need to get below the 136.32 and stay below that level to increase the bearish bias in this currency pair. So there's my look at 3 of the major currency pairs plus 1. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.